Real estate stocks have become a hot topic for investors seeking stability and growth in their portfolios. But with so many options available, one question stands out. What is the top real estate stock? To answer this, we need to look at several factors. Market capitalization, dividend yield, and historical returns all play crucial roles, but there's more to the story than just numbers. Let's dive into the world of real estate stocks and uncover what sets the best apart from the rest. Prologis Inc. PLD currently holds the crown for the largest market capitalization at $101 billion. This industrial real estate giant has been making waves in the investment world, boasting a 10-year average annual return of 13.2%. But is bigger always better? Prologis specializes in logistics facilities, a sector that's becoming increasingly critical in our e-commerce driven world. With the rise of online shopping, the demand for warehouses and distribution centers has skyrocketed. Prologis has positioned itself at the heart of this trend, owning and operating facilities in key locations across the globe. Their success is closely tied to the growth of e-commerce giants like Amazon, as well as the overall shift towards online retail. However, size alone doesn't tell the whole story. While Prologis' size is impressive, it's not the only factor to consider. Equinix Inc., EQIX, with a smaller market cap of $72 billion, has outperformed Prologis with a staggering 17.3 10-year average annual return. This raises an intriguing question. Could specialization be more important than size when it comes to real estate stock? Equinix focuses on data centers and interconnection services, positioning itself at the heart of the digital economy. Now, as our world becomes increasingly connected, companies like Equinix stand to benefit enormously. The demand for data storage and processing power continues to grow exponentially, driven by trends such as cloud computing, artificial intelligence, and the Internet of Things. Equinix data centers serve as the physical infrastructure supporting these digital innovations, making it a key player in the tech-driven real estate sector. But what about more traditional real estate sectors? Enter Simon Property Group, Inc., SPG, a name familiar to anyone who's visited a shopping mall. With a market cap of $50 billion and a dividend yield of 5.2%, Simon Property Group represents a different facet in the real estate market. However, their 10-year average annual return of 3.8% lags behind some of our other contenders. This brings us to another crucial consideration: the balance between growth and income. Now, Simon's Property Group's performance represents and reflects the challenges facing the retail real estate sector. With the rise of e-commerce, traditional brick-and-mortar retail has been under a lot of pressure. However, Simon has been actively reinventing its properties, transforming malls into mixed-use destinations that incorporate entertainment, dining, and even residential elements. This adaptability could be key to their future success, but it also highlights the importance of considering a company's strategy when evaluating real estate stocks. For investors seeking steady income, high dividend yields can be extremely attractive. Realty Income Corporation, O, often called the monthly dividend company, offers a tempting 5.7% dividend yield. But is a high dividend yield enough to make a stock a top choice? Realty Income's business model focuses on acquiring and managing freestanding, single-tenant commercial properties. Their tenants span a wide range of industries, from retail and healthcare to industrial and office spaces. Now, this diversification helps to mitigate risk and provide stable income. However, investors need to consider whether this steady income stream compensates for potentially lower capital appreciation compared to some growth-oriented stocks. Now, to answer this, we need to consider the potential of future growth. Digital Realty Trust Inc., DLR, seems to offer a compelling mix of both income and growth potential. With a dividend yield of 3.3% and a 10-year average annual return of 13.8%, it's a stock that demands some attention. But what's driving this performance? Like Equinix, Digital Realty Trust operates in the realm of data centers and co-location services. This brings us to a key point. The intersection of real estate and technology is becoming increasingly important. Look, as our world digitalizes, the demand for physical space to house servers and network equipment continues to grow. Digital Realty Trust has been expanding globally with a presence in key markets across North America, Europe, and Asia Pacific. Its focus on sustainability, including initiatives to increase energy efficiency and use renewable energy, also position it well for the future. But technology isn't the only sector driving changes in the real estate market. Healthcare is another area experiencing significant growth and transformation. Welltower Inc., with a market cap of $63 billion, focuses on healthcare properties such as senior living communities and medical office buildings. As our population ages, the demand for these types of properties is likely to increase. But how does this demographic trend compare to other factors shaping the real estate market? Welltower's strategy is closely tied to demographic shifts, particularly the aging of the baby boomer generation. As this large cohort enters retirement age, the demand for senior housing and healthcare facilities is expected to surge. Additionally, Welltower has been investing in state-of-the-art medical office buildings, capitalizing on the trend toward outpatient care and specialized medical services. This focus on healthcare real estate sets Welltower apart from more generalized and general REITs and could provide a strong growth runway in the coming years. One surprising trend is the growing demand for storage space. Public Storage, PSA, with a market cap of $49 billion at a dividend yield of 4.4%, has found a way to capitalize on our collective need for extra space. But is this business model sustainable in the long term? Public storage benefits from several societal trends, including urbanization, which often means smaller living spaces, increased mobility, and the general accumulation of possessions. Their business model is relatively low cost, with minimal staffing requirements and low maintenance needs compared to other types of real estate. However, the rise of the minimalism movement and potential changes in consumer behavior could pose challenges in the future. Investors need to weigh these factors when considering public storage as a long-term investment. It's also important to remember that real estate is a global market. Goodman Group, GMGSF, an Australian property group with a market cap of $43 billion, has been building an impressive portfolio of industrial and commercial properties around the world. This raises another important question: should investors be looking beyond their borders for the top real estate stocks? Goodman Group's global approach allows it to capitalize on growth opportunities in different markets. It has a strong presence in Asia Pacific, particularly in China, where rapid urbanization and economic growth are driving demand for logistics and industrial properties. Its focus on sustainability and urban regeneration projects also aligns with growing global trends. However, investing in international real estate stocks can come with additional risks, including currency fluctuations and geopolitical considerations. The telecommunications sector provides yet another angle to consider. American Tower Corporation, AMT, and Crown Castle International Corp, CCI, with market caps of $93 billion and $44 billion respectively, specialize in communications infrastructure. A 5G technology rolls out and our need for connectivity grows. These companies are positioned to play a very crucial role. But how will evolving technology impact their long-term prospects? American Tower and Crown Castle own and operate cell towers and other communications infrastructure essential for mobile networks. The ongoing rollout of 5G technology is a significant growth driver for these companies, as 5G requires a denser network of towers and small cells. However, the technology and telecommunications landscape is rapidly evolving, with potential disruptors like satellite internet and new network technologies on the horizon. Investors need to consider how these companies are preparing for future technological shifts. As we've seen, determining the top real estate stock isn't a straightforward task or discussion. It depends on various factors, including market cap, dividend yield, historical returns, sector focus, and future growth potential. Now, more importantly, it depends on an investor's individual goals and risk tolerance. Are you looking for a steady income stream, explosive growth potential, maybe a balance of both? The answer to these questions will guide you towards your personal top real estate stock. But perhaps the most important question to ask is, which of these companies is best positioned to thrive in the challenging landscape of the future? As technology reshapes our world, as demographics shift, and as our needs evolve, the real estate market will continue to transform. Consider, for example, the potential impact of climate change on real estate investments. Companies that are proactively addressing sustainability issues, such as Prologis with its focus on green building certifications, or Digital Realty Trust with its renewable energy initiatives, though they may be better positioned for long-term success. Similarly, the trend towards urbanization and the concept of smart cities could create new opportunities for real estate companies that can adapt to changing urban landscapes. The COVID-19 pandemic has also accelerated certain trends in the real estate market. The shift towards remote work has raised questions about the future and the existence of office real estate, while simultaneously boosting demand for larger residential spaces and suburban properties. Companies that can flexibly respond to these changing dynamics may have an advantage in the post-pandemic world. Regulatory changes can also significantly impact real estate stocks. For instance, changes in tax laws, zoning regulation, or even environmental policies can affect the profitability and growth potential of different types of real estate investments. Investors should consider how well positioned each company is to navigate potential regulatory shifts in their respective sectors. The top real estate stock of today may not be the top stock of tomorrow. So as you consider your options, think not just about current performance, but about long-term potential. Which of these companies is not just riding current trends, but actively shaping the future of real estate? For instance, companies like Equinix and Digital Realty Trust aren't just benefiting from the growth of the digital economy, they're providing the essential infrastructure that makes that growth possible. Similarly, Welltower isn't merely reaching out or reaching to demographic trends, but is helping to shape the future of healthcare real estate. The answer to that question might just lead you to the real estate stock that not only grows your wealth, but contributes to building a better, more connected, and more sustainable world for all of us. In conclusion, the top real estate stock is ultimately the one that best aligns with your financial goals and vision for the future. As you weigh your options, consider not just the numbers, but also the stories behind them. What does each company's strategy tell you about their understanding of the market and their ability to adapt? How are they positioning themselves for the challenges and opportunities of the future? Remember too that diversification is key in any investment strategy. While finding the top real estate stock is an exciting prospect, a well-rounded portfolio might include a mix of different real estate investments, balancing income, growth, and various sector exposures. Ultimately, the choice is yours. Which real estate stock will you crown as the top performer in your portfolio?